I am here with Samantha Ory, who is the founder of Ouroboros Group based in Boston. And this is going to be an interesting discussion. I don't even know where to start with all the things that she has in her life, aside from what she does day to day with the private equity life. So Samantha, let's just kind of start off on, first off, what is Ouroboros Group? And then we can dive into your life story.
Sure. So everyone always asks me what Ouroboros Group means, and I think it's a valid question, so I will answer it. It means infinite returns in Greek, and that's one thing that we really wanted to get across, when we started the fund to our investors, is that, hey, we're gonna keep producing for you. So yeah.
What kind of companies do you focus on? Can you be a little bit of high level of how many portfolio companies, what the investment criteria is, et cetera?
Sure, absolutely. So we invest in three verticals: in healthcare, manufacturing and services, and the consumer sectors, food and beverage, retail. Typically, we're looking for companies around 4 to 5 million in EBITDA, and we're geographically agnostic. We actually love when companies are coming from Europe and Asia, because we feel like we can actually make a difference bringing them into the US. We ideally love when management stays on. That's kind of a must for us. We're looking for very strong management teams. We almost operate as venture capitalists in that sense, where we're really putting a bet on the management team who is looking to maybe take some chips off the table, but still looking for another bite of the apple into the future.
Is there a portfolio company we can kind of talk through and just kind of learn about the growth story and just kind of how you interacted with them and how the relationship has kind of evolved?
We actually started, it was kind of an accidental start to Ouroboros. Before we even had the name, I was brought by my first partner that would worked with, Nate. He brought me this company. I was still actually at my last private equity shop, and he said, this is an incredible deal. I would love a partner to run this. I have more of the entrepreneurial exposure, and I can help bring the capital, but I really do not, have the leverage buyout, side of things. Could you come and, partner with me on this? And I was so compelled, I left my shop basically to do this. And I had no idea that I was even going to create a company, from this. But it took us, I think, about maybe 5 months to close the deal. It's called C&W, electrical contracting. And I remember talking to the CEO, who said that they had spoken with a lot of other candidates, but liked our spunk, liked what we were going to do post-close with the company, especially with my partner's robust, operating ability. So it was just a really nice fit. And when we closed the company, we had, just a lot of things a lot of low-hanging fruit that we could really work with, especially on the financial side of things. So we helped them kind of clean up their books, kind of create a kind of checks and balances and systems. And hey, there's some money hanging out here. Maybe we could make sure that this is accounted for, so that we're really, getting everything down to the bottom line that needs to be gotten there. And we can also talk about maybe how to expand your sales platform as well, so that we can, help get new opportunities, for your team. But I would say that we've learned a lot about electrical contracting. It was almost like we were being taught by the CEO, and at the same time, we were kind of teaching him about, things that he wanted to make better with the company. And here we are, 2.5 years later, the company is growing just like a weed. They're growing tremendously. And, we're looking eventually probably to do more of a roll-up strategy with them being the platform. We're really in no hurry, though. We're really into organic growth. And, I would say that for them, during COVID, it was a challenging time, but they actually, what saved them was they're heavily diversified in what they do. They work for a lot of news organizations like Channel 5, and they'll come replace the bulbs. So it's high reoccurring revenue, and the media has been very prevalent in COVID, but they also do a lot in healthcare. So they actually maintain all of the MRI machines at Boston Medical, for example, and there's high reoccurring revenue. People get sick, people still need them, to come in and repair. They've just been, doing very well.
A lot of independent sponsors who listen into this are going through similar experiences where I got a deal, I found an operator, and now we need to raise the capital for this. And, it'd be interesting to kind of hear kind of your experience raising the capital for that, and, a couple years later now, maybe how your perspective has evolved on that.
It's a great question. First deal is always the hardest. And it's the hardest part of doing the deal is the money, especially, when you're not independently wealthy and you can't just put money in yourself. I was fortunate because Nate already had a roster of folks that were interested in this deal to do, and he syndicated the deal from 7 high net worth individuals, some family office, and just some kind of friends and family, and then others were just individual high net worth investors. So we basically had to do some convincing that we were going to be able to take this on and we were going to make this successful for them, because it was, a significant amount of money that they put forth. And you're really, in the first deal, you're really investing in us. It's very meta. You're investing in the company, but you're really investing in the to-be-GP to do this deal. We sat there on phone call after phone call, and we gave them incredible deal economics, coupled with a 5% dividend per year. And we also talked to them a lot about, the waterfall of distributions, who's going to get their distributions first, and just in general, just, how we're going to basically make this as easy and painless for them as possible, so that they don't lose faith in us. And as it turns out, we're starting to, get to the point where we can begin to think about returning capital, and also have, paid off a substantial amount of the debt on the debt side and the buyout, which is also very helpful to them, because they say, oh gosh, you're making progress. This is great. So once you have that, we took a haircut, obviously, on the fees. We didn't charge a closing fee. We were just so happy that someone wanted to do this deal, believed in our vision, and knew that we were going to take this to the next level. That was really the reward. So now thinking about it, almost 3 years later, now we're thinking of, fees, we're thinking of structure, we're thinking of, management fees, because we have a 9-person team now. And I brought on a healthcare partner a little bit later on in the game. And we really wanted to make this just a giant private equity shop that was going to, have committed capital eventually, and wanted to go on that track. So we've gotten much more aggressive in the way that we kind of think about these fees.
What are some of the maybe early mistakes when you were just getting this started, or key learnings kind of reflecting back on the past couple of years that you've seen through your journey in the independent sponsor model?
When we first started, I've made so many mistakes on the first deal. It was a wonder that we closed, honestly. I think that we were all sitting there going, oh gosh, like, what do we do, from here? One big thing is really communication between the CEO and ourselves. Now, everything we do is proprietary. We don't go through bankers ever. We have our own pipeline of opportunities. But at the time, this is a bank-led deal. And there was kind of a communication disconnect between ourselves and the CEO, because we were kind of relying on the banker. So there was a lot of things kind of as you ink the purchase agreement, towards close, that, you're like, okay, who gets the accounts receivable? How much, cash on the balance sheet should be left? And then you're having to explain this to somebody, who isn't in the financial community, who may not understand the implications of what you're doing post-close. So that was a big challenge, was kind of the communication barrier that we had to start to, learn how to manage ourselves, the bank team, and also the management. And then I'd say the other big challenge was really convincing people that we could do this. We were really young at the time. I think my partner at the time I was probably 26 and I was 28. So we were young, and we had robust track records from other firms that we were at prior, but we had never gone out on our own to do this. So we had to appear much older than we were. So people they didn't meet us in person at first. They just heard us on the phone and they expected us to maybe be in our late 30s, early 40s. Then they met us and we looked like kids. So we really had to start by just having a phone conversation to hook them in. It took about 6 months all in to close. We actually closed in February. So we ran the deal heavily in December, which is a very hard month to do a deal, as you can imagine. So we found the deal originally. So my partner had found the deal through another colleague of his, and we were floating, kind of the idea of a couple different deals. And then he had, said, this deal is probably the one, that is probably going to get the most traction on the capital end. And I said, well, let's do this one. Let's go for this. And this is the one that we could grow the best. So after doing a little bit of modeling, this was our guy basically. And it turned out that it was banked basically. So it was from a friend of his that was also kind of a bank-led deal. So it was almost like a hybrid, and we agreed to pay him obviously because that's the right thing to do.
Like how did you go down this path? What's your background? And maybe we can kind of do the high level career overview, and then we can dive in deeper.
Sure. So I have a very untraditional finance background. I actually went to art school. I went to Parsons School of Design, and I was supposed to be a graphic designer and or starving artist on the street selling you pretty paintings. That took a turn. I was at Prada Corporate, and I liked it, but I decided that I liked buying the handbags more than I liked being a part of the corporate entity that I would be a part of. But one thing I really loved was the financial aspect. I think that that got me excited. I love the idea of, balancing books and, thinking about, how many items you have to sell to, get your revenue to, XYZ. So I had a lot of friends who were at NYU, and they were doing their traditional Goldman Sachs, Bank of America internships, and said, why don't you give this a whirl? So I basically begged Needham and Company in the summer of 2009 to give me an internship. And I think they looked at me like, okay, we'll give you a shot if you want, but, you don't seem to have the correct backgrounds. And I said, I'll work hard. I'll work really hard. I promise. So that summer, they did a consumer deal. I was actually in the semiconductor and tech group, which I knew nothing about, of course. But they did the one consumer deal, and it was called Zipcar. And I worked on Zipcar that summer, on the side, because they said, oh, you're a consumer. I think that this would be a good marriage for you. And the CEO is a woman. So it's kind of a nice entry into finance for you. And they were really right. I mean, honestly, it was fantastic. It really launched my career and made me really interested in, pursuing a path in finance. So from there, I was at Morgan Stanley. I was a consumer on the trading floor, and I was there for a few years. I had just massive exposure because it's Morgan Stanley. So while I was there, I got to work on Michael Kors, Groupon, Whitbread, just tons of really, really big IPOs. I worked on Words with Friends, Zynga. And I decided that I wanted to go to this magical, mythical place called the Buy Side, which at the time, I remember I wasn't a packaged finance person. I'm very scrappy and a kind of a self-made finance person. And everyone just kept talking about the Buy Side. And I was like, what's the buy side? Yeah, they said that's the better side to be on, where, things are relaxed and you get to call the shots. So I was like, oh, I have to get there. How do I get there? So everyone said, you got to go back to business school. You have to get an MBA. And I said, okay. I was never planning on even getting, a grad degree, but found myself at Brandeis. And I did, I have an MBA in finance and economics and a minor in social policy. And I did my degree in about a year and a half. I was always much more of a worker than an academic. I liked school, but school is more of a way for me to leverage what I really wanted to do after school. Whereas some people they're pure academics, they eat it up. And for me, I eat up the real world. I just love the environment. So my last semester, I did an internship down in New York, but I should back up. Before that, I worked for a hedge fund, actually. I was introduced by a family friend to work at this quant hedge fund that was run by a senior engineer with many, many years of experience and one of the founders of Goldman Sachs Private Equity. And I got to help back test this future trading platform and kind of use my coding skills, which was great. I was heavily introverted, and that was kind
hold
of
on. Coding skills, what?
Coding skills. I code in 5 different languages.
When did you develop the coding skill set?
At Parsons, believe it or not, they make you take a coding language. And for us, it's processing. Processing is graphic designers code. And so is processing, HTML, SQL. These are all languages that you use for building websites in the background. And if you know one language, it really unlocks your path to another language, especially if you know the root. It's equivalent to if you know Spanish, French is suddenly easier. So,
Got it. Okay, so back testing strategies, and you were there for a year or so, and then you were saying that then you went. What was the next step?
Yeah, so it was backtesting strategies. And, it was one side of the alternative market. And people was like, you're here, you're on the buy side, you got here, congratulations. And I went, God, well, the buy side's really introverted. I'm a true extrovert, and I want to use my quant skills, but I also want to do something where I can interact with people on a daily basis. And they said, oh, well, you're on the wrong side of the buy side. You want to be in the private equity side of things. And I went, what's private equity? So they basically, taught me a lot of, I had a very, very strong male mentorship. And a lot of people taught me, including my now husband, who was in private equity, who said, oh, well, private equity is buying and selling companies, and, you get to make a difference post-close with them. And I said, sign me up. How do I get there? And they said, well, you have to go back into iBanking. And I said, okay, well, I can do that. So I ended up in New York at a merchant bank called Corporate Fuel Advisors, and I did an internship with them to really learn the ropes, and to also kind of put the stamp of approval of, hey, I understand, what modeling is, I have a Rolodex and whatnot. And I seemed to be a natural at it. I mean, it was something that I felt like I was at home. I was like, this is what I want to do. I want to do this for a private equity shop. So meanwhile, I was at Brandeis, and I was in a private equity class, and I met this GP, Gary First, who was the founder of Generation Equity Capital, or still is. And we built a relationship. And every time he would come down to New York, we'd grab coffee, we'd chat. And, he eventually was like, I'm looking for, a new hire, and I'm looking to, build, a more robust team. Would you be interested? Would you be interested in coming back to Boston? And I said, oh my goodness, yes, this is what I've been waiting for. So Gary gave me my, my break in private equity. And I was with him for a long time, 3.5 years almost, and ended up seeing a lot of things that I loved in private equity, and also ended up seeing a lot of things that I thought could be done differently from someone who didn't have that traditional background. So I started to kind of mesh all of my experiences together into kind of what I felt was the new wave of private equity. And eventually it was going to be a paradigm shift. I ended up leaving, to kind of explore, potentially starting my own shop. And the branding came later. I really concentrated more on having the portfolio companies first, so that I felt like I deserved to have the branding, if that makes sense.
What motivates you? Because your background is really diverse. And I think some of the things we were talking about before this call is, I think you're also know sign language.
I do.
You speak Mandarin. You've run a marathon. You've done a charity
Mandarin.
boxing.
Broken Mandarin.
Done a charity boxing event. You just seem to have this really diverse set of interests. So I'm just kind of curious to know, what motivates you to live the life that you are doing.
Sure. Yeah. So I always want to be happy. And I think that that's one thing that a lot of people in a capitalist society such as ours kind of throw to the wayside. And, for me, I can't be the most successful version of myself if I'm not happy. And I think that's true for a lot of people. So I always follow, I know really quickly what I'm good at, what I'm not good at. I'm a very introspective person, and I have a pretty high EQ. So I'm able to kind of couple those things and say, this isn't working for me. Why am I staying here? I should be going to where I think I can be the best at what I can be, because for me, I want to be top of my field, and you can't be top of your field if you're not passionate. You don't work, 24/7 on what you're doing, because it takes just a tremendous amount of effort and work to make something look effortless. And also, you have to be intellectually curious at the end of the day, or else you're never really going to grow. So that really motivates me and always motivated me, and I have a very positive outlook. I'm a very hopeful person, and, wanted to take that kind of, attitude with me as I went into a very old guard, male-dominated sector.
What shaped who you are, that intellectual curiosity? Where are you from? What's the family background?
Sure, it's actually a great question. So I come from a long line of entrepreneurs. So my family, they're actually in the fashion industry, believe it or not, back in the 70s and the 80s. And my grandfather, father, and uncle always worked together. They actually all know how to sew. They're master seamsters, and they were in women's sportswear down in Manhattan in the garment district. The company was called Cottage Tailor, and obviously has since gone under. But before then, they were in the fashion business, and it was a very rough business to be in, especially in the 80s. And then in the early 90s, my uncle had just graduated from Harvard and noticed a lot of trends in tech and telecom. And he brought that back to my grandfather and my father and said, we can make a business out of this. I have a really interesting way to basically do voice over the IP. And this was in the early 90s when no one really knew what that was, and created Priority Call Management. So then fast forward, the 99, I believe, their company was sold to Bell Atlantic, which is now AT&T, and they did it again through a company called Acme Packet. Acme Packet sells packets of data, as you can imagine, and it was actually a public company, and it traded on the NYSE, and ended up being sold to Oracle. So they just basically made things appear out of thin air and saw interesting trends in basically, in the economy and the macro economy that they knew that they could capitalize on. And then they're doing it again now with 128 Technologies with cybersecurity. And I always saw kind of that family bond and that drive, to be, how do you be a family, but also be a corporation at the same time? How do you balance that act? And then at the same time, how do you persevere in times where, there's a recession, things are going well, things aren't going well. But you always have to have that patient hopefulness. And at the same time, a lot of people to back you, who hear your story over and over, and you have to take criticism. You have to take, when people say, oh, you're amazing, that your head doesn't get too big, and whatnot. So those are really my mentors. I've had a very strong mentorship in my family from that, and that kind of motivated me to go off and do my own thing, because entrepreneurship's in my blood.
That's really interesting, because in all of these episodes that I've done, I kind of see like a recurring theme of the founders. They had some type of exposure to other entrepreneurs and how that motivated them. What do you think you're employable?
Probably not. I'm probably not employable. In fact, I'm almost certain that I'm not, because honestly, I have taken such a distinct path. I'm probably never going to get a job again. I'm just going to be working for myself forever. I think it's really hard to go back into corporate America, but I think it's also really hard when you have a lot of, very diverse interests and also kind of visionary ways about you, where a lot of people think, God, what are you doing? Like, are you crazy? Like you get that a lot, honestly, when you're an entrepreneur. I'm sure that you've gotten that as well, being an entrepreneur yourself, and people go, what are you doing today? And then 2 or 3 years later, it's like, hey, look, something's happening.
Yeah, something's happened. But then I've realized now in year 4 of entrepreneurship that the reason why I do this is not at all for the title of entrepreneur, the title of, running my own thing. That doesn't matter. Like what really matters to me in the core of entrepreneurship is that I can execute on the ideas that I want to when I want to.
Yeah.
And I can pursue the creative ends that I want to. And we can move at the speed that we want to. And the flexibility to work where we want. I don't know if when we want that really is applicable right now, because it's 7 days a week, but it doesn't feel like 7 days a week. It's the passion. And, I think it's just been this really interesting journey, and to realize that maybe I am completely unemployable, and maybe I'm sealing my fate here. But that kind of brings me to another point, which is, Do you believe, or maybe to what extent do you believe, that entrepreneurs need to burn the boats?
Yeah, I mean, I think that it has to almost happen. You have to have these ups and downs. I mean, sometimes I feel borderline bipolar, to be honest with you, where one day you're super up and another day you're like, oh my God, this is
Yeah.
never going to work. What am I doing? And I think that it comes out of, a lot of strife and challenges that you come up with the best ideas when you're pretty hopeless and you think this isn't going to work. Because when things have always been going very well for me, I'm not very creative. I'm just kind of status quo and things are going, okay. And then COVID happens and I'm like, oh my God, I'm fighting fires with my portfolio companies. I'm figuring out, how am I going to raise a fund in this environment and whatnot. And then you get this survival entrepreneurial instinct that keeps you kind of going through things, but also it also gives you this creative ability to think around, problems so that you can actually still get there, which I think is the most fascinating thing. I mean, I think finance it's a psychological journey. It's all about psychology. I've always been very fascinated by the idea of psychology. I come from a long line of psychologists, by the way.
Oh yeah.
My dad is a psych major. My grandmother is a psychologist. And, I always am trained to think about human emotions, the experimentation behind situations like COVID, the social experiments. And that's how I think. And, this journey has been, crazy. And I think that you need to almost have these moments in order to come out on top and really prove out your model. Because if you can make it through this, then you can make it through anything.
How emotionally prepared did you feel for this? And I ask that because 4 years ago when I started Debt Maven, I didn't know what was hitting me. And the emotional journey was so much more severe. Now, 4 years later, it's almost like I recognize it, but I feel like an objective distance to it, and I could recognize what is happening, and there's almost a better sense of being able to manage that emotional journey up and down in entrepreneurship. Yeah, so what's it been like for you?
COVID in general, you mean, or just kind of
Us starting the business, going through this, the ups and the downs, now you're what, 4 years into this? Two
Yeah,
years, 4 years? Um,
3. Mhm.
so what's it been like for you?
It's been a whirlwind. I mean, you start and you really aren't sure where this is going to go, and you have a roadmap in your head, and you go, okay, this is what it's going to look like. And it ends up looking nothing like that 6 months in. And then you're like, okay, I'm going to pivot. And then it ends up not looking nothing like that. And then you're going to pivot again. And you keep pivoting and pivoting until you get kind of what your version is. And along the way, you have these roadblocks. I liken it to a video game. I'm a huge gamer. And I liken it to like being in a leveled Mario, in Luigi game where you're going through the levels and it's like, oh, got to dodge the mushroom, got to dodge the bullet, got to jump over this. Then I got to save the princess. And, that's really what it is, and it's really getting to different levels. And I feel like I'm halfway through the game at this point before I can get, just a little bit further. And you have to be able to pivot and be nimble, because a lot of people, they don't do that. They're very rigid and they say, it's my way or the highway. This is how this is going to look. And if this isn't it, then I'm out. And a lot of people also, they don't have they have a fear of failure. I fail every day. And I think that most entrepreneurs do. And whether or not they're willing to admit it, you need to be okay to fail in order to get to the next point. Because if you never try because you're too scared, then you're never going to make your vision work.
There are a couple points here. One is that fine line between deciding when to pivot versus persevere, and knowing, no, we're going to stick with this service line, this product line, and we're going to get deeper into this, as opposed to getting the outside feedback like, hey, COVID hits, you're no longer making chemicals, now you're doing hand sanitizer, or like oil and gas chemicals, now you're doing hand sanitizer.
Yep.
I just did an interview with that, and the company successfully pivoted through that. How do you think that you have changed as a leader? Now you have 8 or 9 people on the team. If you look at where you are at now and kind of leading a team and working with management versus 3 years ago.
I have grown so much. In fact, it's funny because I always thought of myself, you have a vision of what you think you are, and then the vision of what everybody sees you as. And it's a real aha moment where I find that I'm a really good CEO. I'm really good at managing top line, big picture items. But then when you start to get a team, I was like, oh God, it'll be fine. I'm going to manage all these people. It's going to be great. Horrible manager. I was honestly, like seriously, when I first started out, I was like, I wasn't even sure, like, what do I tell everyone to do? Do they just know what to do? And then I had to balance my own life and also managing them. And then my business partner stepped in and was like, no, let me show you the way. So he trained me and how to be a really good manager. And I will be forever grateful to him for that. And I think that, it's very interesting because the first 6 months, you gel as a team basically, and it takes a very long time to do that. And having to manage people who are bright-eyed and bushy-tailed but have all of these questions, at the same time, it was challenging. So now I have scheduled time with each individual as well as a pipeline call every Monday that we go on to debrief. And I'm always available, but I find that they don't reach out to me because they think that I'm too busy, which I probably am, but I will take their call. So instead, I need designated time on my calendar for each and every one of my interns, my associates, my analysts, to make sure that they feel like they're getting the time that they deserve, but also their questions answered. But I would say that I still have a lot, of runway still where I have to learn how to be a good manager and, not just, a good CEO.
Did you have to learn how to manage people? And I ask that because so much of like starting 51 Labs, you're doing everything. And then you need to get in the position where you train other people, but that day, those hours that go by and by, like, God, I got to execute on my client work. Is it worth even training? And then the person's gone after 3 or 6 months for one reason or another. But it goes into the other thing, which is, well, if you have the capital, then you hire an experienced team. But if you have never done this before and you don't have the capital, then you take, the people who are hungry and just want the experience. But there's that dynamic between spending the time to train people versus like executing on what you have to do to pay the bills.
At first I felt like, okay, this is going to be something that's a self-starter role. But then I realized that I really want to train them both on, modeling and the deal sourcing side, because they're going to leave me reviews. They might not be reviews like on Yelp, but they're going to tell all of their friends in their network. And, my smart interns and people who are interviewing for these roles, they want to talk to other interns and, talk about their experience. And, I want a glowing recommendation every single time so that I can keep attracting top talent who feels like they've gotten something out of the internship and that they've learned. But I also want them to get to a point where, I don't bring in people who don't have any experience, but I want to get them to a point, where they feel like they can help to run these deals, as I give them a little bit more. So I'm looking for people who basically learn really quickly, and are self-starters in that sense, so that I don't have to do as much. And then a few of them, I've ended up hiring them, as my associates and as my analysts. So that's always, a distinct possibility. But I completely agree with you. I think that, there's kind of a fine line, and I've experimented with both, but I found that training them to their full potential and having them feel like they really got an excellent internship out of it helps me in the long run, because they end up at like McKinsey and JP Morgan and Duff and Phelps, and then they can help me if I need a favor from one of those firms. So
yeah. What is kind of one of the requests that you have to maybe some of the people who might be watching or listening in, maybe at different funds or whatever? What are some things that people can be thinking about for you?
Yeah, so we're going out. We're going to raise a fund. I think we're probably going to raise, around 100 million. We've actually had a lot of traction from family offices in particular, and that's kind of who we've gone to: small pension funds and family offices. We're a little small for endowments at this point, but we're really looking for individuals who are looking to seed us as a first-time fund, but also willing to put in a little bit of effort and mentorship along the way. to feel like they have protected their downside risk with a new fund, but at the same time, help us grow, because we've got just an incredible pipeline, of opportunities that we're working on. We actually have a proprietary algorithm that offshoots just a copious amount of pipeline opportunities. We have about 15 to 20 in our pipeline of actionable opportunities at any one time within our 3 verticals. And we also have a trend spotting algorithm that helps to trend out what's going to happen maybe 3 or 5 months, in advance. And, a couple of these trends that we've looked at have included telemedicine and remote working. This was back in like February, and people just really weren't interested in, or really didn't know what was happening or where the economy was going. So those are low-hanging fruit opportunities in the investment market that we can really capture. And I think that, having these backers to help so that we can jump on these opportunities and be the first mover in so that we can pay a lower valuation would just be tremendous for us.
So my final question is, can you tell your marathon story?
Oh, absolutely. In fact, it's a juicy one. I raised money for Dana-Farber and I was very happy about it. I go, oh, it's easy. I'm a fundraiser. It's like a quarter of what I do. So that was the easy part. I had no problem asking people for money, especially for cancer research. So I train, I do the whole thing. I'm like, I'm in great shape. This is great. So day of the marathon, it was absolutely torrential downpours. It was every 3 miles. It was torrential pounding rain. There was a thunderstorm. There was a hailstorm. There were 30-mile-an-hour winds. And it was about 32, 33 degrees out, which is very undesirable. So at the starting line, I was drenched by the starting line. And I remember going there. I'm like, I don't know how I'm going to do this. And I just something survival, instinctual kind of caught up with me. And I went, God, I can do this because I've gone through a lot of other stuff in my life and it's just 26.2 miles. I can do this. So on mile 3, I saw people like breaking down and crying, like grown men who were like, I'm not going to do this. And then they bail. And I'm just like, oh my God, this is mile 3. What's happening? I keep going. And then I see some ROTC people. And they're like in their boots, their gear. And I'm like, wow, if they can do this, I can do this too. And then I think that moment, it was around mile 21 where Heartbreak Hill, where everyone starts to just completely lose it. I was pretty numb at that point, and I was carrying about 15 pounds of water that had saturated my clothing. Then I didn't even realize it because I was just in survival mode. And I was just like, I don't know if I can go on. And then I saw a blind man who was running and had his coach with him, and they were running together tandem. They hold like a rope, and I'll never forget that. I started crying for absolutely no reason at mile 21, and I was like, oh my God, like if they can do this, and this coach is going to make sure that this man crosses the finish line, and if this blind man, can do this, and he can feel, but it's probably exacerbated for him because his senses, can feel all of this much more than I can do this too. And that's really what got me through it. And I just kind of let my brain turn off and thought of different things. My earphones, you couldn't hear a thing because it was pounding rain. I didn't listen to music for the whole 26 miles, which I had planned. So that's kind of an example of like, something where you thought it was going to go one way and you just had to completely pivot. And, that was, the strategy was I had no strategy, and it was just basically my, instincts getting me through.
I think this is fascinating because it is really highlighting the importance of role models. And it doesn't have to be like this formal mentorship. Sometimes just seeing somebody doing something that you don't know if you can do just helps you go to that next goalpost. This is fantastic. Well, I appreciate the time with this and looking forward to connecting soon.
Thanks so much. This is great.
Right. See ya.
Thanks. Bye.